Coming up in today's video, we'll talk about the meltdown in gold, the rebound taking place on the US dollar, the state of US stocks and whether they can continue this monumental rise, and an update on some of my trades, including my oil position that I currently have on. As we get started, make sure to hit the thumbs up button and subscribe. Let's jump in. Bitcoin's pulling back here just a tad here today, down to 116,000. This has been a big winner this year, but so has gold. Gold has been a massive winner this year, but despite its winnings, we do see yet again this level of resistance holding very sharply at the 3440 level of resistance here. And this may sound a bit confusing, but I have really very little directional bias when it comes to gold, even though I have a long position on it. Let me explain. So a couple weeks ago, when I initially took this trade, I caught a really good entry point. We pulled back to a level of support along an upward trend line. I took a small trade with a stop loss below that intraday spike low. At the time, fundamentally, we were seeing a little bit of weakness in the US labor market. We were seeing inflation cooling. And since then, the story has changed a little bit. Specifically, we had a positive uptick in US jobs data, which is bearish for gold, and inflation has kind of gone sideways, which is neutral for gold. So while the longer term trend is still intact and to the upside, we've entered into what has been a very frustrating for many consolidation zone on the higher time frames for gold. And this can drive traders insane. And I'm just wondering, you don't have to comment, but I imagine, I'm going to guess here, that a lot of gold traders this year have been very frustrated by this range-bound market environment in gold. Trading this type of environment where you're getting follow-through trendy moves is very different than trading this type of environment where everything sort of moves and gets excited, but then just trends back the other direction. We call this a two-way market where you're going up, down, up, down. You're really not decisively moving one way or the other. And you're really, we've been flat on the price of gold since going back to April. Really, we have not gone anywhere. We've just moved back and forth. And so when you're trading an environment like this, especially with a trend following style like I tend to do, this can be like cutting butter, right? It's really easy to ride a good trend when it's moving in your favor, to trail stop losses, to take partials. It just feels a lot easier to trade in that environment. On the contrary, if you're looking to buy dips and sell rips, this environment's actually quite difficult because yes, if you had bought, you might have sold here, but then if you tried to sell here, right, the market kept going. It's definitely more of a trendy environment, which favors certain strategies over others. But things have switched. If you've actually found it better to trade gold in recent times, your strategy may be a little bit more oriented towards mean reversion, where you're selling rips and buying dips, and back and forth trading actually favors you. It's important to identify what you trade and why, so that you understand the different types of environments that you're in and make sure you're not getting chopped to pieces if you're a trend follower. So yes, I have a trade on in gold, but I'm very well aware that I may actually get taken out of my trade for a very small profit. And this is the downsides of trailing stops. Sometimes you have a move that goes in your favor, you trail stops a little bit, and the market gives back a substantial amount of those gains, ultimately just to take you from a nice winning trade to a really small winning trade, which is very possible for me on gold. So why don't I just close out of this trade if I'm so neutral on it at this time? Well, because I'm just letting price determine if it wants to try and find support here. I do like, as I mentioned, the long-term upward trend for gold. I still think that that is intact, and I do see in years to come gold moving higher from where it currently trades. So I'm willing to kind of just see what the market wants to do, and it's not a very big trade for me anyways, so I'm just staying passive. But I just want to reiterate to people who only trade gold, there's a lot of people who like obsess over gold and they just trade it. I would encourage you to just explore, maybe do some back testing this weekend, to take a look at trading other markets too, because sometimes, just like every market can go into trendy mode, every market can also go into range-bound mode, and having a list of things can be attractive for trading environments where this happens. You can actually just move on to trading something else. You can see currently that gold is not on the list of top setups. It is a neutral reading, which we exclude neutrals by default. You can see if I add it in, you can see there's gold getting a +3 score. If we take a look at some of the stronger readings like the NASDAQ, the Nikkei, the Dow Jones, we can see that indices have been trending really nicely. So where the gold traders have been frustrated, if you moved over to indices and we're trading this momentum, there's been some beautiful trades to take advantage over here. NASDAQ continues to drift higher. I am personally waiting for pullbacks. I do think that this market is a little technically overbought, but I love the fundamentals and would like to be a buyer on any sort of significant discount. Here's a look at the Nikkei, which was in the news big time the last few days with US and Japan signing a deal. I am interested to see if we can get a larger pullback on this one, as I too would like to buy the dip on the Nikkei. As I mentioned, Nikkei getting the second place score here here in terms of most bullish on the edge finder at this time. Technicals look good, sentiment looks good, economic data looks good as well. Here's a look at the Dow Jones sitting just shy of its all-time high at this time. I'd be interested in either a pullback to some levels of support or a breakout here, but nothing for me at this level currently. And it hasn't come out just yet, but later today we will be getting the latest commitment of traders data, which will show us what institutions bought and sold this week. If you have a copy of the Edge Finder, I definitely recommend keeping an eye on this around 4 p.m. US Eastern time, because we'll get the latest COT buys and sells, which will populate in this table down below, and we can see what they bought and what they sold on a week-to-week basis. This is very useful for tracking institutional money flows to consider being more aligned with the pros in the industry. If you don't have a copy of the Edge Finder, here's your chance to get it for the lowest price of the year. We're currently offering a 40% off discount, but for viewers of my channel, we're offering 45% off if you use the first link in the description down below to send us a direct message on our website. Just let us know you were watching the video today and you heard about the 45% off discount, and we'll send you all the information so that you don't miss our biggest sale of the year. And so last week we saw some big inflows into the NASDAQ, gold, the Nikkei, Euro. I'm wondering if we'll get some more of that. And on the sell side, we saw things like the Japanese yen, oil, the Russell, the Dow Jones, and SPX get sold. I'm very curious to see what they do with gold and indices this week. So like I said, that data will update in a few short hours automatically within the Edge Finder. So let's talk a little bit about the US dollar, which has been in a massive downward trend this year. We've seen the dollar lose from its highs at most 12.5% of its value against a basket of currencies. Now that is a pretty substantial move for the dollar index. However, the US economic heat map has done something unique. It's actually shown that US dollar impact here when looking at the economic metrics that we track are actually starting to potentially shape up in a bullish fashion for the US dollar. Where we're really earning a lot of bullish kind of points here is specifically in the labor statistics. We have unemployment rate, which ticked lower than expected, which was good for the US dollar. Jobless claims, which came in better than expected. Again, this is still showing some labor statistics that are strong. Job openings were more than expected. ADP did miss, but NFP, right, the non-farm payroll, the big one, came in very, very strong. And then finally, we recently had some really strong retail sales numbers that came out as well. So we've had a little bit of an uptick in the data, yet the currency itself has not traded too much higher off of this. So in my personal opinion, we may actually be on the cusp of a slow start to a reversal in the US dollar. And my personal opinion is I think we are closer to a bottom in the dollar than we are to a top. In fact, who knows? Maybe we have put in a low for the year around this 96.7, but I wouldn't make a huge bet on it. And what I mean by that is for me to get bullish on the dollar and actually bet that it's going to go higher, I'd really like to see breakouts of this 99 level for starters. Something of a more decisive move higher that can kind of hold its ground would be really important in my view to start getting the dollar index to start actually trending higher. A short position that I already have a very small size in is the pound against the US dollar. My timing on this was terrible, but now it's back to about break even. I went short over here on sort of a 4-hour retest of this level, but of course it shot higher, came right back down. I have a very small short position on the British pound with willingness to potentially get more short if the British pound against the dollar moves higher up into this 137.50 region. We've had a little bit of weakness in the economic data out of UK, but still only showing a 50-50 economic reading in the Edge Finder's UK economic heat map. The euro also still looks really strong against the dollar. This is not something I'd want to bet against. And the thing is, you know, even if I'm looking to bet long on the dollar, I really would prefer to see some weakness in the price before really getting involved on the short side of any of these currency pairs, especially when we take a look at retail positioning. As of the latest data that we have on retail sentiment here, what you can see is that we're getting a contrarian signal, getting a bearish reading on dollar Swiss franc because the crowd seems to be very bullish on it. Then we take a look at the euro dollar. What we can see here is that the crowd is very bearish on euro dollar. So this is still a bias in which the retail crowd is betting in favor of the US dollar, and these charts continue to trend against them. So it'd actually be, I mentioned this yesterday in my video, but I'd like to look for a sign of reversal on things in terms of sentiment on things like euro dollar and the rest of the majors. So I'd actually be looking for this to give me a contrarian bearish signal, meaning once retail traders start to get really long euro dollar, that would tell me that we could potentially be at the top end of this trend. So what would typically happen for that to take place? Well, usually it would involve the chart actually starting to pull back. What tends to happen is retail traders oftentimes in currency world are very counter trend. So they're trying to buy just at the worst possible time and the start of a new downtrend. So I'm keeping an eye on the reversals that we're looking for in things like the euro dollar and others. And for those of you guys who are Forex traders in the United States, listen up for a second. I've got something really cool to share with you. Today's video sponsor is OANDA. And OANDA, if you haven't heard of them before, is a well-regulated US brokerage and is offering a really special offer to my subscribers at this time. If you use the specific link found in the description down below for OANDA for US traders, you can take advantage of a really generous welcome bonus that they are offering new clients. I have traded personally with OANDA for years. It is one of my favorite Forex brokerages, and I highly recommend exploring them to see if they're right for you. Don't miss the opportunity to take advantage of their welcome bonus. All you have to do is create a new account, go through the process, and they've got some really cool features available to you that you can find full details on using the link in the description down below. I've traded Forex for years, and I know the struggle of being a US trader, wanting to trade Forex and not really knowing the right brokerage to use because our options are kind of limited. But to me, first and foremost is trading with a reputable brokerage, and OANDA has been on the street for a long time. They've been around the block and they have clients all over the world, and they're offering, like I said, some really special welcome bonuses to US traders at this time. So don't miss the chance to explore the offers available currently with OANDA using the link in the description down below for my subscribers. Every Wednesday and Friday, I am a participant on the Market Insights podcast. If you have not already explored the podcast and you're a podcast listener, I highly recommend you add it to your listens. We'll leave a link in the description down below if you'd like to hear more from the full podcast episode and add it to your subscriptions. Check it out. Yes, so this morning we did get UK retail sales, which came in a little bit worse than expected. You can see the month-over-month reading here was forecasted to be 1.2%, and instead we actually got a 0.9% growth in retail sales, so some slower than expected data here. Overall, again, the UK has been, the British pound has been performing really well against the US dollar. But recently we have seen a little bit of a slowdown in that momentum, perhaps largely due to some of the economic data that we've recently had. If we take a look at the UK kind of data as a whole right now, this week we had some PMI data, which came in a little bit mixed. We had services PMIs for the UK came in slightly better than expected. And then if we take a look at, of course, the retail sales number today, it was a little bit worse than expected. Overall, the inflation story in the UK is still a work in progress. They have inflation higher than some of their peers, like for example in Europe, which is near that 2% target rate, and of course the US hovering around a 2.7% CPI number. So we do see inflation overall in the UK remaining to be a bit sticky and does put a cap on rate cuts in the time being for the UK, which is a challenge for pound bears, of course, because if the British pound sees down the pipeline less rate cuts due to elevated inflation, that could be sort of problematic. However, the slowing growth could be a catalyst for the Bank of England to potentially consider further rate cuts from here. Yeah, so yesterday we had some interesting headlines with Trump actually paying a visit to Jerome Powell and taking a look at some of the construction. It was actually kind of a crazy video for those who are listening who saw that. It was a very wild video. It actually looked to me like it was almost AI generated. Powell and Trump standing side by side and Trump kind of probing him actually about the spending going on in regards to renovations to the Federal Reserve stuff. And it was almost comical. It looked like a skit. I saw somebody commenting that online. I thought that was a fair point. It looked almost manufactured. But Powell, of course, you could clearly see he was not having any of it. He kind of pushed back on Trump's jabs, citing how much money was being spent where, and Powell kind of pushed back on it a little bit. But actually what came out of it is that, this morning Trump kind of put out the announcement that he thinks that Powell's going to cut rates, or he thinks that he got the impression that Powell's going to cut rates after speaking with him, which of course was a little bit interesting. If we take a look at the US dollar, it is slightly higher here today. Yields are pretty much unchanged for the most part. So when it comes to, rate cuts, probabilities I don't think have changed too much. The market is still suggesting or forecasting a rate cut coming up in September, being the most likely candidate. We do have next week a Fed meeting, or July 31st, we have a Fed meeting, but it is largely expected that the Fed will remain on hold and continue to stay wait and see. Just a side note on central bank stuff, we did hear also from Christine Lagarde, the ECB president. She also kind of put a stake in the number of rate cuts that were expected from here for the ECB, saying that they too are sort of in a wait and see. However, it's a very different scenario. When we look at the Bank of England, who is dealing with a little bit more inflation. We take a look at the U.S., a little bit more inflation. The U.S., of course, the Federal Reserve, very on hold when it comes to rate cuts for a while now, but of course on the edge of potentially starting that rate cut process. Meanwhile, in Europe, they are well into their rate cut, step by step, going sequentially lower for the last year or so. I believe they've cut like 8 times, and actually this has been a point of drama for Trump and team. They've been really heavy on the Europe's been cutting rates. Why aren't we cutting rates? Although, of course, it's a little unfair to point and say, hey, they're cutting rates when we have a different situation, a different economy here in the U.S. And differing levels of inflation as well. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day, we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.